Hi, I'm Tamira Parker of Nosy Parkers, and today I'll be talking about funding for your business, the options available to you as well as some of the pros and cons. What is best for you will depend on your personal circumstances, your business circumstances and your approach to risk taking. Although writing a business plan isn't essential to secure funds, it is something I advise all my clients. At the very least, it will give you clarity and enable you to focus on and achieve your business objectives. If you need help with a business plan, check out my video blog on how to prepare one, or you can get in touch using the contact details at the top of the screen. So many of my clients have experienced that chicken and egg situation where we know we need to invest to grow, but we don't have the time to generate the funds ourselves. This is where it makes sense to seek external finance. It could be that you're a startup and need extra administration, marketing or other support. Finance could make all the difference and it'll enable you to generate more business and, more importantly, more profits. Here's a breakdown of the fundings available to you. Number 1, invoice discounting and factoring. Now typically the financer gives you a percentage of the value of the invoice up front while you wait for the payment, and how much will vary dependent on the lender and your industry sector. 2, invoice trading. Here, lenders, unlike invoice discounting and factoring, allow you to select which invoices you use to take out finance. 3, venture capitalists. You'll perhaps have some idea of how venture capitalists work if you've watched BBC's Dragon's Den. Venture capitalists usually invest other people's money and look for a tenfold increase in the business value over a 3-year period. They don't usually invest in startups because of the risk involved, unless they are confident about the product opportunity, market opportunity and management ability. 4, business angels. These are wealthy individuals looking to invest in companies. I would recommend searching online for Angel Investment Network, a website which connects UK entrepreneurs with angel investors. 5, peer lending. Here you can pitch to multiple lenders via online platforms. You'll need financial forecasts and a business plan, and you can see my other video blogs for guidance on this. 6, crowdfunding. This is similar to peer lending, but you'll have to give investors part of your equity or provide rewards. 7, merchant cash advance. A loan that's based on the income you receive from debit and credit card payments. It's repayment via future card transactions as an added percentage. 8, short-term cash loans. If your business is profitable, you could get about 50% of your average monthly income from your bank. The loan is repaid from the bank account. 9, trade finance. This loan helps bridge the gap between you paying your supplier for stock or materials and actually getting the payment from your customer. The lender pays the supplier direct and recoups the funds when your customer pays. 10, equity release. You might be able to secure between 50% and 70% as a loan by the lender putting a charge on your property. 11, asset refinancing. You could raise funds by refinancing assets such as vehicles and equipment under new leases. This can generate large sums of cash very quickly. 12, friends and family. Borrowing from people that are close to you is not always a good option unless they're millionaires. You wouldn't want them to lose their money. 13, overdraft facilities. Bank overdrafts are an option if you're profitable and have a good cash flow. Having an overdraft will cover you for an emergency or a temporary blip. 14, bank loans. You'll need to be prepared to offer a personal guarantee or assets. Banks are more likely to lend to companies that have been trading profitably for a few years. The Enterprise Finance Guarantee, or EFG, is a government-backed scheme, which means some business owners can access bank loans even if they've been turned down elsewhere. 15, business grants. Government bodies offer grants towards, for example, training, taking on staff, development and research. Search online for Government Business Finance Support Finder. 16, soft loans. These low-interest loans are available through government bodies and charities. Search online for startup loans, big issue investment and Prince's Trust. Now, I hope this has given you a good overview of the fundings that are available. Of course, many start-up business owners will use their own money in the form of savings or credit cards or even remortgaging their homes. Now please contact me if you'd like further help, or you can see my other videos and blogs for loads of great free business advice. I'm Tyria Parker of Nosy Parkers. Thank you for watching.